Well, thank you everybody for joining our Forests and Finance webinar, the June 2021 update. We're just going to wait another minute or so. There's still a few people just joining. Please bear with us a moment. Okay, welcome everybody to the Forests and Finance webinar. I'd like to introduce myself. I'm Tom Picken. I'm the Campaigns Director for Forests and Finance at Rainforest Action Network, one of the participating organizations in the Forests and Finance Coalition. We're very pleased to have you joining today. We have a number of participants from civil society organizations, some representatives from financial sector, sustainability side of things mostly, and some journalists also who broadly represent the main stakeholders or users of the Forests and Finance platform. Here I've just listed the webinars that are happening this week, so perhaps if you have colleagues in other time zones or other language preferences, then we have webinars this week also in Bahasa Indonesian, in Portuguese with French interpretation, in Chinese, and also English with Japanese interpretation. The details and registration information can be found on the Forest and Finance website. So today we're going to run through some of the new features of the website and take a little bit more of a closer look into the investment and policy updates that have happened. But just before we do that, I'd like to let people know that the Q&A button at the bottom of their Zoom screen is available. So if people have questions either throughout or at the end of the presentations, please feel free to write your question in there, and one of the panelists will be able to either respond during the webinar or at the end when we leave some time for some questions and answers. So for the agenda today, we have 4 excellent speakers who will be taking us through firstly the new website features by Merel van der Mark from Forests and Finance, who is the coordinator. Wout Waerdeman from Profundo will then take us through the investment data. Then we will have Willem van Gelder taking us through the policy assessments. And finally, Eddie Sutrisno from Indonesia, who will present an impact case study. Just before we hand over to Merel, a little bit about our coalition. The initiative is a coalition of 8 organizations currently, and we work together collectively to seek to prevent financial institutions from facilitating environmental and social abuses that are sadly common in forest risk commodity production. We do this by aligning strategies and coordinating campaigning to essentially improve financial sector transparency, policy systems, and regulations. A little bit by way of background, the platform itself was set up in 2016 with really 2 core aims at its heart, which is transparency and accountability regarding the financial sector's role in deforestation and rights violations. The platform itself has 3 main functions. One is the core, which is the open source data set, and this has 50-odd thousand individual deals listed in a searchable database through multiple search criteria. Secondly, it's a tool where we are able to evaluate and rank different bank and investor policies with what standards they require of their clients regarding environmental and social and governance criteria. And thirdly, it's a platform where we can present on cases, in particular where clients are engaged in activities that either violate regulations or indeed financier policies themselves. The scope of the website essentially is looking at the financing both in credit and investment, to 300 companies involved in forest risk commodity production across all 3 tropical forest basins, in particular sectors pulp and paper, timber, palm oil, rubber, beef, and soy. And I would like now to hand over to Merel van der Mark, who is the coordinator of the Forest and Finance Coalition, who will take us through the new website features. Over to you, Merel.
Thank you, Tom. I think you see my screen now, right? So yeah, so today we're launching a redesigned version of the Forest and Finance website. This new design has more data visualizations, and it also has become easier to navigate between the different parts of the website, which are the financial data, as Tom was saying. And now for this, we have the data deep dive option, but also a search option, which allows you to do get a quick overview, and another search option that allows you to compare different financial institutions. Then we have the policy data, where we have a big overview table with the scores of all the assessed financial institutions, but we also have the profile pages of each of these financial institutions with much more detail about how they score on their policies. And finally, we have the data on the impacts in the form of blogs and news articles, reports, which document the social and environmental impacts that some of this forest risk commodity finance is causing. So I'll now take you through some of these new features of the website. And starting with the data deep dive. So this is a little bit similar as to what we had in the previous website. This is where you can research the full database using up to 10 different filters. So searches can be done by company, by holding group, but also by the client group, the subsidiary, by financial institution, by sector, by region of both the financial institution, but also of operations of the companies, and by finance type, for example. These search results are returned in a big table, which show the full list of every transaction that was found in our database for that specific query. And on top of that, you will see a graph which has 2 tabs, one for the top creditors for this specific search and one for the top investors. So this allows you to very quickly get a sense of who are the main financiers involved in the selection of the search criteria that you have made. To help you do more research on this on your specific query, you can download the data set. This is very useful if you want to do more research into specific transactions, if you want to make your own graphs, for example. It's also useful if you just would like to download the full data set. If you just make sure that all the filters are selected with all selected, you can submit and you can download the full data set and do your own searches. And there's a new option which gives you a URL, which is very easy, which is a useful tool. So you can either share your search with colleagues, or you can use it, for example, if you want to include it in a blog or a tweet, for example, you can easily, quickly share the results of your search. Then if we go to the next. So the data deep dive page has a lot of detail, but sometimes it's useful to get a little bit more of a general picture of what the data shows. And for this, you can use the quick view page, which allows you to get an overview of the total financial flows. So here you first need to select if you would like to do a search by credit or by investment, and then you can do a search with 2 more variables. These search results are returned in the form of a tree map, which covers all the financial flows mapped in our database. And below that, there's a table which has the top financiers identified for your search, and also it compares the policies for the different sectors of these financiers. Now, if you look at the tree map, here you can, so this example was made for credit by sector and by finance type. And here you can see in a very quick, just glancing at the tree map, that from all the credit that we have mapped in the period from 2013 to 2020, most of the credit went to the pulp and paper sector, second by beef sector, and third by the palm oil sector. And then each of these blocks you can click on them, and then a new tree map opens, which will show you the breakdown by the second variable that you chose, in this case, the finance type. So if you click, for example, on soy, it breaks down what types of finance are used to finance the soy sector. And here you can see, for example, that most of the finance is provided in the form of corporate loans. Then in the corner right, bottom of the right side of the slide, you see some more links that let you easily navigate to other parts of the website, which have more useful information that can complement the search that you're doing. The compare the banks option. Here you can choose different financial institutions, as many as you would like, to compare. And here this breakdown provides you a graph, which is broken down by tropical forest region and by sector. So in this example, there's been made a comparison between Banco do Brasil and Rabobank. And if you compare the 3 different tropical basins, you can see, for example, that Banco do Brasil is the financial institution which provides most credit in Latin America, whereas Rabobank provides more credit than Banco do Brasil in Central and West Africa and in Southeast Asia. And if you look at the colors in these bar graphs, where yellow stands for soy and the dark green is beef, Banco do Brasil provides a lot more credit to the beef and soy sector, whereas Rabobank provides a lot more credit to the palm oil sector. And here again, below these graphs, there's also a table which provides information about the amount of finance of the banks that you have selected, and it compares the policy scores for the different sectors of these financial institutions. Now let's go to the policy assessments. On the policy overview page, you can compare the average scores of up to 50 banks and investors on environmental, social, and governance criteria for 6 different forest risk commodity sectors. So they've been assessed separately for each of these big forest risk commodity sectors. Right now, we're launching this assessment of 50 financial institutions. In September, we will launch another 150 financial institutions. If you click on any one of these financial institutions that have been assessed, it will take you to the profile page of that specific bank or investor, where you can find more detailed information. At the top, it will show you the top 5 clients of that financial institution, as well as the top 5 investees. And here, the red dots are marks for, they stand for red flags, and they are given when a company is particularly controversial. And we've considered companies controversial when they have received a lot of bad media, for example, or they have been the subject of an RSPO complaint, or we as Forest and Finance have published articles or reports about them which have exposed social and environmental impacts. Below that, you will see a breakdown of the policy scores by the different categories, so environmental, social, and governance, but also a breakdown by the sector, so for beef, for soy, for palm oil, pulp and paper, timber, and rubber. And on the left-hand side, you will see the total weighted score, and this is a weighted average of the scores for the different sectors, depending on the exposure of these financial institutions to the specific sectors. And Jan Willem will go more into this in his presentation. And then at the bottom of the
I believe we may have an internet connection problem from Merel's side. Just give Merel another moment to see if that is restored. Apologies. Okay. I'm afraid we've lost Merel. So Merel was just completing a description of the bank profile section on the website, and a particular feature which is useful, which is new, is that when you look at the bank profile areas, not only can you tell the bank policy assessment in detail, it also links out to particular case studies and blogs and other reports that mention that bank, again, as a tool to improve the accountability, more closely connecting the financial institution to the cases on the ground. I would like now to hand over to Warmerdam from Profundo, who is going to take us through an update of the investment assessment. Over to you, Vard.
Thanks, Tom, for the introduction. Yes, so I'm going to talk about the updates of the investment data that we've done in the first quarter of this year. It's the investment data, so bond and shareholdings data, complements the credit data that we also have on the website. The credit data, as you may recall from from last year and from the press release, is we found $161 billion of forest risk loans to the 6 forest risk sectors that we are analyzing in the three forest rich basins. And now we've just updated the investment data and the investments in bonds and shares. Maybe to give you a very brief overview of the methodology we use for this research. So for the investment data, we use Emacs for the bond holdings data and Refinitiv for the shareholdings data. In order to build the bond holdings data, we also have to use some parts of the Bloomberg data. A lot of the pension fund data we have directly from the pension funds, so from ABP in the Netherlands or from the Government Pension Investment Fund from Japan. And all the financing that we identify linked to one of the 300 companies that are in the scope of this research, we adjust the identified positions. So let's say there's a position from ABP of 10 million in a particular company. We adjust that value for the proportion of that company's business activities in one of the 6 forest risk sectors that we research, and also in the forest rich regions. So it's a combination of both a business segment adjuster and a geographic adjuster, and these two adjusters are then applied to all identified positions. Well, what this means is that in our recent updates, we found that investors held around $46 billion in forest risk bonds and shares, which is an increase from last year, a significant increase from last year. And this is likely attributable to the market crash we had in the first quarter of last year due to COVID, and an increase in investment activities and share price increases, and also with retail investors now with money to spend as they're not using it on holidays. We see an increase in share prices, most likely related to this. Later this year, we'll be publishing a report specifically analyzing how the investments in these 6 forest risk commodities and forest rich regions has changed over the last 5 years. But that will be for the next update. So around half of this $46 billion that we've identified is attributable to palm oil, about a fifth in pulp and paper. Unsurprisingly, given the role of palm oil, we see that about 2/3 of these investments were in Southeast Asia, and around 1/3 in Latin America. So the top investors include Malaysian government-linked investors. These are at the very top: PNB from Malaysia, APF from Malaysia, and QEP, also a pension fund from Malaysia. And also the top US asset managers, BlackRock, Vanguard, Fidelity, and Japanese and South Korean national pension funds. You see the Government Pension Investment Fund of Japan here, also the Norwegian Government Pension Fund Global, are all in the top 15 investors. The largest investments are in Sime Darby, a huge palm oil conglomerate, around 7 billion, followed by Suzano, which is merged with Vibria. So there's both our pulp and paper companies active in Brazil. We see around 3 billion invested in Top Glove, a rubber glove manufacturer, which has profited a lot from the Corona crisis, and JBS, a large, well-known beef company from Brazil. If we look specifically at investments in Latin America, as one of the largest regions where these investments are, we noticed that we found that there's around $15 billion in forest risk investments in bonds and shares. And for the selected companies, more than half of this was attributable to pulp and paper, so Klabin, Suzano, CMPC, and around 30% in beef, so Marfrig, Minerva, JBS, and around 13% in soy. In terms of where the financial institutions making these investments are coming from, around 40% are from South America, just under 40%, 36% are from North America, and around 14% from Europe. 6% only from East Asia. East Asia is South Korea, Japan, and China. The largest investors are, well, unsurprisingly, BNDES from Brazil, the Brazilian Development Bank, and the large US asset managers, BlackRock, Fidelity, Vanguard, Bank of New York Mellon, but also you see the Government Pension Fund of Norway, Government Pension Investment Fund from Japan, and another pension fund from the Netherlands. The largest investments are in Suzano, big pulp and paper company, JBS, the big beef company I mentioned earlier, and Klabin, another large pulp and paper company, and then followed by ADM, OG, CMPC. Now, going on to Southeast Asia, another large region attracting a lot of investment, we identified $30 billion in forest risk bonds and shares. Around a quarter of this, 3/4, sorry, is attributable to palm oil, and about 16% to rubber. A lot of palm oil companies also have rubber activities on their plantations or next to the palm oil. Around 5% was in pulp and paper. In terms of where the financial institutions were coming from that were making these investments, well, together East Asia and Southeast Asia accounted for almost 2/3 of these investments. Around 20% of these investors came from North America. And looking a little bit more specifically at who these investors are, then we see again PNB, EPF, and QAP from Malaysia, these Malaysian government-linked investors, also Felda as a Malaysian government-linked investor, having the largest investments. But we also see Vanguard and BlackRock, these big US asset managers, among the largest investors. In terms of investments, Sime Darby attracted the largest investments, this large palm oil conglomerate I just mentioned, and Top Glove, but also palm oil companies like IOI, Batu Kawan, which is the parent group of IOI and EPO, and Itochu, this Japanese conglomerate, which is active in a number of the forest risk commodities that we research. And that's it from the investor update. As I mentioned, we'll have the creditor update, or as Tom mentioned, we'll have the creditor update again in September, around the end of September, and we'll have a more detailed report diving into the trends, investment trends, these investors later this year. I'd like to hand over to Tom.
Thank you, Bart. And with that, we're going to pass straight over to Jan Willem. Thank you.
Great. So by knowing who the investors are, and the banks and investors mostly involved in these forest risk commodities, we set out to develop an assessment methodology to look at their policies on dealing with environmental, social, and governance issues. This methodology is based on international agreements, like the Paris Agreement and other conventions set by the United Nations, by the International Labour Organization, the UN Environmental Programme, etc., but also by best practices in the global business community and the financial sector. So no deforestation, no peat, no exploitation policies, principles for responsible investing, the principles for responsible banking, the OECD guidelines for multinational enterprises. So all these agreements and best practices we have taken together, and we have used to select 35 criteria in 3 categories, which are very well recognizable for investors: ESG, environment, social, and governance. So the environmental criteria include criteria around deforestation, around peat, water, biodiversity, nature reserve areas, etc. The social criteria are around indigenous communities, about human rights, about labor rights, etc. And the governance criteria are about transparency, both of the companies being financed as the transparency of the financial institutions, grievance mechanisms, instruments used by the financial institutions, tax payments, corruption, and so on. So a whole list of 35 different criteria grouped in 3 categories. These are used to assess the policies of the different financial institutions, the top 54 at the moment on the website, separately for each of the 6 commodity risk, forest risk commodities. beef, palm oil, pulp and paper, rubber, soy, and timber. Some financial institutions have good policies for palm oil, but not for rubber and so on. So we try to assess them separately in the first place. And also looking separately to their policies for loans and credits on the one hand, and for investments in shares and bonds on the other. Not all financial institutions are active in both fields, but we, when they are, they often have separate policies, and we looked at those separately. We combined the scores for loans and credits and for investments per commodity, so that resulted in separate scores for the 6 commodities, which are on the website for each of these commodities, for each of the financial institutions. But we also combined the scores of the 6 commodities in one overall score by using the amounts of financing and investments per commodity as weighting factors. So the exposure coming from our database of a certain financial institution to the different commodities served as a weighting factor to combine the scores for the different policies. So the sectors where they're most exposed in, the policy score for that sector is most important. So we basically use three types of scores. So a 0 score when the criteria which we formulated is not in any of the policies of the financial institutions. A 10 score when the criteria is in their policies and is also applied to not only the companies they are financing or the companies they are investing in, but also to the suppliers of these companies, and does not have any other exceptions. And for the in between that, we assigned the 8.5 score in principle when the criteria is addressed in the policy of the financial institutions, but there are exceptions or it is not applied to suppliers, etc. And the reason you see here on the screen not only zeros and 8.5 and 10s is that for each commodity, as I explained, there is a separate assessment of their lending policy and the investment policies, and the scores are combined and therefore result in different scores, different figures. So here you see for JP Morgan Chase the first 6 criteria and the scores for the 6 different forest risk commodities. Another bank like this one, Industrial and Commercial Bank of China, has much lower scores on hardly any criteria is included in its policy, and also, of course, the total score then comes out very low. This is the overview page of all the policy scores. So the weighted total is indicated in the second column. This is, as I explained, weighted on the basis of separate scores for each of the 6 commodities, which are then brought together into one weighted score based on weighting factors derived from their exposure in terms of loans and credits and investments to the different commodities. So, yeah, and further details are given of their outstanding credits, their investments, where their headquarters are, and the specific scores for the different commodities. All this can be sorted at, so you can sort financial institutions by name, as is done now. You can also sort them by country, or by weighted total score, or by outstanding credit, or by score for a specific commodity. So what we have published now are 54 main banks and investors, so the ones who we found in our database to be exposed most to forest risk commodities. We assess the policies. They are a mixture, as explained earlier by Watt, of financial institutions from Asia, from Europe, from the United States and Brazil. And we have done a draft assessment and sent it to them to comment on these scores. The results in terms of the top 5 of best scores shows 3 Dutch banks, ABN AMRO, Rabobank and ING, the Government Pension Fund Global from Norway and Citigroup from the US. These are the top overall scores at the moment. But we see a lot of lower scores below that from the other financial institutions we assess. So many banks and investors are still scoring very low. So they have homework to do, develop good policies on the forest risk commodities they are exposed to. And finally, our plan is to expand this policy assessment from the present 54 to 200 main banks and investors investing in forest risk commodities in the 3 tropical regions. We aim to update that in September. So please wait for that. Okay. So handing over to Tom again.
Thank you, Jan Willem, for running us through the policy assessment updated. We're now going to pass to Sutrisno of Tuk Indonesia, who is going to present a case study. Over to you, Gun.
Thank you, Tom. I'm Sutrisno from Tuk Indonesia. I will share relating with a case study and then specific on Royal Golden Eagle Group or RGE Group. We know RGE Group is controlled by family of Tycoon Sukanto Tanoto, and RGE Group is a major producer of pulp and paper and palm oil in Indonesia. They not only control pulp and paper and palm oil, but they have control various business entity through complex offshore structure. Like Merel said before, forest finance data allows users to explore financing for the corporate group, for example, is RGE Group, but can also look into financing by commodity or by particular business entity within the group. Under forest and finance data, RGE Group, we identify RGE Group receive huge level of financing from international bank. Like I said before, this company, this group is have a major producer of pulp and paper and palm oil. Under April, they control pulp and paper business, and then under ASEAN Agri, they control palm oil business. Under their business, their practice in Indonesia, they create some impact. For example, is environmental impact, social impact, and governance impact. For environmental impact, RGE pulp mills are supplied by 16 pulpwood suppliers with concession totally 1.2 million hectares, and over 2015 until 2019, they have contributed to around 47,000 hectares of deforestation. Over 30% of their supplier concessions are in peatland, which release vast quantities of greenhouse gases are extremely fire prone, with around 55,000 hectares have burned in 2015 till 2019. And then relating with land fires, uncontrolled land fires linked to the plantation industries are major cause of Indonesia greenhouse gases emission. And then in several times in our identification, RGE palm oil mills, they sourcing from plantation companies driving deforestation in Indonesia. Let's say, for example, in leuser ecosystem and then critical habitat from Sumatra elephant and orangutan. For social impact, this is many long-standing land right, not only dispute, but we said land right conflict, because some conflict not only for negotiation, something like that, but these conflicts come to the court. So not only dispute, but we call conflict. And then this is many conflict with local community. For example, their operation for one pulp mills, this affecting 3,000 family. And then RGE is my contributor for fire and haze. And then this make big impact, serious impact for public health. Researchers believe that the fires in 2015 contribute to 100,000 excess deaths across Southeast Asia. This picture is a picture in North Sumatra relating with Toba Pulp Lestari. This picture says tanah ini milik desa Naga Seribu, tolong jangan ditanam eucalyptus. This land is owned by community in Naga Seribu village. And then please don't plant your eucalyptus in our land. This picture is very, what the name, keep many messages. And relating with the governance impact, one report in last year indicated RGE has misidentified its pulp export under reporting the revenue by 66 and 8 million US dollar. This is from 2007 until 2018, and then which may have generated relating with tax revenue 16 and 8 million US dollar. In 2012, RG received big money and relating with the tax penalty. RG received $200 million tax penalty from systemic tax fraud and money laundering its palm oil business. This is only for palm oil business. This is impact relating with their operating Indonesia, social and then social, environmental, and governance. And if we're looking the creditors, this based on our data in Forest and Finance, this our list of 10 of creditors for RGE. If we're looking, this is big from China and then from Japan, and then including ABN AMRO from Netherlands. I'm not explain more on it, but good if we're looking relating with their policy. In our assessment, like Ward and Jan Willem said before, and we're trying to make easier for public to understand how about their policy relating to scoring. If you're looking at ABN AMRO, their scoring is medium to good. If you're looking MUFG, this from bad to medium. Bank of China is very bad. ICBC is very bad, and then CITIC is very bad. So what's the message from this assessment? From this assessment, we can say big impact in field. This is have relation with the financial policy. So we hope big financiers can change more on their policy. So with good policy, this can support, can make pressure for the company to change what's going on in field level, relating, including their policy and then the operating in field level. With the Forest and Finance data is give more information for public, and then not only for public, but especially for financiers to looking what's going on in field level, and then very serious, must be very serious to do due diligence for their clients. That's from me, Tom, and then I give back to you, Tom. Thank you.
Thank you very much, Gun. Much appreciated running us through the importance of how client operations are affecting communities in the ecosystem, making that connection much more important around the role of bank finance in either perpetuating the issues or playing a role in raising their due diligence standards, so as clients must also change their practices in order to attract finance. So that brings us to the end of the presentations. Thank you to each of the speakers. a wealth of information contained in there, and that's a snapshot of some of the new updated financial and policy data. I urge people to go onto the website and have a look around at both the data itself as relevant or helpful to your work areas, and also to look at the news and analysis, which is increasingly a source of information showing how the financial sector is beginning to be held to account for its role. So we've had a number of great questions come in, and we'd like to just spend a little bit of time now touching on some of those. I think if we can first start with the question around, does investing in a forest risk company result in low scores for the institution? I believe that was the correlation being asked. Perhaps I could invite Vard to respond to this question.
Yeah, thanks, Tom. I think I can answer part of it, and then maybe Willem can add if necessary. So the policy scores were assessed. It's not necessarily the case that if they have how should I explain it? So the policy scores are weighted for the investments and credit that the financial institution provided to a specific sector, and the quality of its policy. So if it had a great policy, but it wasn't really financing that sector a lot, then that figure was adjusted slightly in relation to that. But if it was financing a lot of a specific sector, and the policy scores were not so good, then that in the overall score, that was played a far greater role. Maybe Willem, you can add a little bit more detail on this.
Yes, but I don't get what is the question. Where's the question?
So the question is, do financial institutions get a poorer score if they are exposed to high-risk companies?
Okay. Not as such, no. The policy scores is based on what they have written in their policies, and indeed there's a weighting based on their exposure to certain sectors. But within each sector, there are, we have chosen these sectors because the whole sectors are high risk. So of course there is more evidence on certain companies, but there's no reason to say that because of exposure to one particular company, the policy score should be adjusted or seen in a different light. Because these sectors are high risk overall, have a high risk of being involved in deforestation, because there is scientific evidence that these sectors contribute to much of the deforestation taking place in tropical areas. Banks and investors should have good policies when investing in these sectors, no matter what. Also in companies which at this moment have a good reputation. Rather, these policies would help them to select out these companies and to improve the activities of companies. That's the whole objective.
Thank you both for your responses. I'd like to pick up two related questions. One excellent question around the typically low scoring for many of the Asian financial institutions, and looking at how improvement in both policy scoring and, of course, in actual financial transactions can be achieved in regions where there is less civil society leverage, perhaps, with examples given as China and Malaysia being two of them. And I think this is also closely linked to an earlier question around
oh no, you've lost Tom. maybe I can answer this, start answering this, and then pass it over again. So actually, one of the partners, the coalition partners in Forest and Finance is Sahabat Alam Malaysia, and they're working very hard to engage with the financial sector to improve the practices there on the ground. There is a lot of political space actually by the Malaysian financial sector regulator. They have the green taxonomy, and they're working. They have a JC3 related to climate change. So there are some efforts related to greening of the financial sector, which is a policy space created, or political space, where this civil society can now operate in, and where Sahabat Alam Malaysia is as a partner engaging with and having conversations with financial regulators and with individual financial institutions. In China, we recently published a report about Chinese financing of forest risk commodities. It was written in English and translated into Chinese. We also reached out to China Dialogue, which is a media website with a lot of regulators and civil society organization and media coverage. Also in China itself, the opinion piece we wrote was translated into Chinese, and we'll have a webinar in Chinese language, only in Chinese language later this week, using case studies that we wrote the report, but also the recent report by Global Witness, which also used forest and finance data about the need for regulatory change. So there may be some less civil society space in these two countries, but there is actually quite a lot of political space for this also in China. China was the first country to have the green credit guidelines before the European Union, and has in 2016 launched the Greening of the Financial System initiative. So there's a lot of political space there where NGOs working on this issue can take advantage of.
Thank you, Vad. And my apologies for dropping off. The additional questions that I've made a note of, though having dropped off, I've lost some of the questions, so my colleagues are just sending me those. There was a question around why mining and fossil fuel extraction is not part of the data. Is there anyone from the panelists who would like to take that one? I'm also happy to give a quick response. So currently the focus has been on the soft commodities, forest risk commodities, and financing into that space. In 2016, when we established the platform, there was a distinct lack of financing information, particularly for those sectors. There typically has been better data available around fossil fuel extraction. There is another initiative, however, a coalition of organizations that produced the annual Banking on Climate Chaos report, and that has very detailed, comprehensive financial information around the transactions from global banks, as well as assessment of bank policy scores in relation to fossil fuels. The question on mining in particular is something that as a coalition we have been discussing and considering for inclusion in the website in coming updates. So assessing the main mining operations, excluding fossil fuels, which are resulting in impacts on forests and forest communities. So to be updated later on that one. Just turning to another couple of questions that I am now seeing. Thank you, colleagues. A question from Rainer on the different score colors, and do they represent traffic light system? If so, what are the individual ranks? Merel, would you be able to?
Yeah, sure. Indeed, they are a traffic light system, and any scores below 4 are scored red, between 4 and 6.9 are yellow, and anything above 7 and above is scored green.
Thank you very much. Some additional questions. I think an excellent one which gets to the issue about what is the impact of policy change versus actual change on the ground and in lending practices. So there's a question here looking at a comparison between, for example, financing to April with relation to ABN AMRO and Bank of China. And given the vast policy differences, does it mean much if both banks still have them as a client in their portfolio? So perhaps I could ask Vard to speak to any sort of trends or patterns in the financing during the periods that have been analysed, and any relationship between policy standards and changes in lending as a result to certain companies such as April.
Yeah, great question. When we correlate the policy scores with the levels of financing, we actually find that financial institutions with better policies are financing the sector less, because there's less choice in terms of companies that then meet those standards. The question of April is an interesting one, because April has been engaged with by EPN and a number of other organizations for a long. ABN AMRO has been engaged around April for quite a long time. But ABN AMRO is now sizing down its trade finance operations, which will most likely have an impact on its financial relationship with April. It's likely that April will continue to be financed by the Bank of China. But we do see cases where financial institutions terminate their relationships with companies that have continued allegations or continued violations of the financial institution's own standards. We saw that with Bumitama Agri, Indofood, Agri, and April as an example. ABN AMRO didn't step out of April, but other financial institutions did commit to terminating a relationship with April.
And would any other panelists like to address that question any further?
Yeah, thanks, Tom. I will respond relating with the Mauro question. Yeah. But I not focus on the April case and then not talk about ABN AMRO and Bank of China. But if we talk about the whose bank have good policy, this are good for the consumer, for community, for public to feeding information for bank, because we believe until now bank they don't have good practices of due diligence, because not easy to get evidence from field level, especially for banks. Yeah, if community know, if public or social GSO know this bank have good policy, so GSO or community can feeding information for the bank, so bank can recheck again to their client. So yeah, like Ward said before, for some case when the bank have good policy, and then community and then civil society send feeding information to the bank, they make change, and then many things changes in the field level. Many labor cases solved when the bank have good policy, and then they can engage with their client. So this is good if bank have a good policy. With some case, the financiers with bad policy, and then their clients have bad practices in field level. It's not easy to send complaints because they don't have revenge mechanism. So this make creating many cases in field level. So we hope, especially in Indonesia, yeah, many financiers from foreign financiers invest in Indonesia, but if we compare like Japan banks or Europe banks, Europe banks have better policy than Japan banks. And then if we compare Japan's bank with Malaysia or Indonesia banks, Japan's banks have good policy. And now we just get a good update from company. Some banks have with the good policy, they already require to their client to have time-bound plan, sustainable time-bound plans. I think this is good, yeah, good progress. What I know, this is coming from MUFG. So if all banks have good policy and then they really serious to enforce their policy, I think this make many things in field level. That's from me, Tom. Thank you.
Thank you, Gen.
Can I just add to that a little bit?
Please.
Yeah, just maybe to clarify that the reason why we do the policy assessment is also partly to expose the potential difference in what they say and what they're doing, right? And that's also why on the website, in different parts of the search functions, we show the policy scores, but at the same time, we also show the amount of credit and investment that that financial institution has provided. So you can also see that if it has good policies, maybe it doesn't provide that much finance. As Bart was saying, we do see that trend, but there are still quite a few cases where banks have relatively good policies and still provide a lot of finance. So there is still a huge risk that they are exposed to environmental and social and governance impacts. And one way we have kind of found to try to identify that a little bit is by, on the profile page of the financial institutions, to highlight the clients that are particularly exposed to risks that have, that are controversial, by adding these red flags. So that's a way you can kind of see that even though the bank might have good policies, if still they have many clients that do have red flags, there's something, they're probably not implementing the policy right. And you can use the fact that they have good policies against them, well, not against them, but as an argument to say that they should be implementing their policy better and making sure that they're not causing the social environmental impacts that supposedly these policies are protecting them against.
Thank you, Merel. And such great interrogating questions into how this work is being realized in practice and what are the strategic results from it. And I think what we're hearing from the panelists is that, of course, transparency alone is not enough. It doesn't lead to accountability automatically, but providing this data in an open source format and continually trying to expose cases where client operations are in violation of stated policies, it's creating this momentum towards accountability where it's becoming harder for banks to stay silent and to continue financing business as usual. And it's interesting with the correlation that Vard mentioned around also the higher policy scoring tending to result in lower financing to the sector, which is still very high risk and resulting in routine harmful impacts to ecosystems and communities. And then another issue which is worth mentioning that was touched on briefly is that the ratcheting up of bank sector policies is also often correlated with the improvement in financial sector regulations, and that increased pressure on the financial sector, along with the laws and regulations requiring financial sector compliance on risk and increasingly environmental and social governance risk factors is also having this positive feedback impact. So I would like to turn to another question. It might be the last question we are able to fit in before the end of the webinar. And it's a methodological question coming to this issue partly around does the policy assessment take into account actual performance, like reported human rights abuses and environmental damage done? Jan, perhaps one for you.
Yeah, no, the policy assessment doesn't do that. There are several reasons for that, but one is important. One is that it's practically very difficult to have a good overview of which companies are involved in which abuses, or for some companies that is clear, but for others you cannot be sure. But coming back to what I said before, there is enough scientific evidence that these sectors as a whole create a big risk for deforestation, but also for human rights abuses. So banks should be very careful when investing in these companies, improve their due diligence, try to investigate very well. So that starts with good policies. Then you know where you're looking for, what are your criteria, and then the next step is collecting more data. And that's something where we can contribute in, where we can help in, because we are working together with our partners in the different countries, in Brazil, Malaysia, Indonesia, on case studies to document much better how these companies are actually performing in practice, and connecting that to, well, who is financing them, who is investing in these companies, and how that relates to their policies. So yeah, that's part of the work we are doing.
Thank you, Jan Willem. And I would like to bring the webinar to a close and thank all of our panelists and especially the participants who have joined us today. We would very much welcome you to be in touch for any reason, whether to collaborate, share information, or indeed get feedback to improve our initiative and platform. Please do contact us directly or contact us through the page, a relevant contact page on the website. And we will be sharing around the presentation to the panelists following this session. So once again, thank you to everyone who's presented today and for all of you joining us. Thank you and goodbye.
Yeah.